Okay, hello everyone, and good morning. Today is Tuesday, June 13th. Michael Boutros here with you for this live intraday strategy webinar on SB Trade Desk. Good to be with you guys here this morning. Horace, Mark, Pete, Sandy, Sarub, Steve, we got the whole gang. So, we are still coming up on FOMC in just a few days. Yesterday was an interesting day with the Looney crosses. Late in the session, you got some commentary from the deputy there talking about basically the oil shocks that were being a big concern for the economy have sort of started to become absorbed, and they have to rethink their policy stance, i.e., the next move is likely to be a hike. Now, and that's not, shouldn't be any surprise per se, because we are, the Fed is looking to hike, things are starting to improve and all that good stuff. The argument remains harder. But either way, from our standpoint, outside the noise, it was a beautiful play, right? The CAD finally saw the strength that we were looking for. We got the break of the weekly opening range and the monthly opening range, which was sitting right at support. It was kind of hard to get in, but a lot of the CAD crosses have been following suit. So we'll go over, we'll just touch base on the dollar index real quick early on, but dollar CAD, Euro CAD, Sterling CAD from last night. We'll give an update on Kiwi, which is approaching that topside resistance. Still looking for possible exhaustion on that one. Dollar yen with a turnaround and overnight trade right after tagging support. And then we'll touch base with the Aussie as well as the British pound, which also came right back into support again to start the week as we were looking for, and also remains a very interesting trade on my end. If you have any questions or trade setups, okay, so Sarub wants to take a look at gold and silver. I got you, Sarub. Not really my favorite plays, to be honest with you, right now, especially with what gold's doing. I'd have to look lower, in my opinion, but we'll take a look. Bungani wants to look at Aussie CAD. Let me write that one down. I got you on that. Karthik says, hello, everyone. Good morning to you, sir. Sandy says, I am long Sterling CAD from support. Sterling CAD, yes. Okay, so we'll definitely take a look at Sterling CAD. That's already on the list. And Karthik Kiwi we already got as well. Okay, so let's jump right into price action. Again, if you have anything in the meantime, feel free to press me. No problems. Here's what the dollar index looks like to start off the session. So real quick on the daily chart, you remember 96.46, that 618 retracement. We didn't really quite tag it, converged on the lower parallel here heading into the start of the month. That was sort of the key level of support that we were looking for. We turned right ahead of it. Interestingly enough, we're now making a run right back at the monthly open. So we're unchanged right now for the month of June, sitting right at monthly open support. Interestingly enough, also that trigger that we were looking for in momentum never gave out, right, on a closed basis. So we have to respect the monthly opening range. One thing I want to note, I'm going to continue to note over the next couple of days, you'll probably get sick of hearing me say it, but heading into Wednesday, which is just a day away, things are likely to get kind of range-bound and boring. So don't be too surprised if there's some lackluster price action. I think we're already starting to see that lull take into effect. That being said, broader bearish invalidation, still 97.87, 97.78, this region here. A break below key support, and you're still looking for those runs into 95.89, 95.20. To the downside. Intraday chart looks like this. No change really. Still working with that upslope. Turned out that parallel, really was a very nice run. So we ran into the upper parallel. Wouldn't be outside the realm of possibility to come back into the lower parallel. The lower parallel right now matches up very nicely with those swing lows. As I noted in the piece on Monday night, or Sunday night was it, the bullish invalidation for this has been raised to 96.80, 96.70. This 10 pip range, if you look at the daily chart, the low day close for the year comes in at 96.70. Those swing lows come in at 96.80. So 10 pip range here, which coincides very well with the lower parallel for the formation that we've been following. All right. One other thing is I don't want to get really aggressive on short dollar just yet. I was looking at this morning. The 100% extension comes right in line with that region. So if we were to get a drop on that, and especially if we hold this into FOMC and you get like a whipsaw, an area you'd want to really focus on. If this gives out, I'm thinking right back. The broader picture still looks bearish, right? The only reason we've been looking for this bounce here into the start of the month is because of the divergence and because of the support. So I don't want to really get too aggressive in either direction yet. We're still setting up the monthly opening range. We're still below that parallel, and I'm still looking for us to clear that initial range we talked about last week. But in the meantime, that's your your bullish invalidation level, and again, key resistance on the near term. Still right there at 97.50. Questions on dollar index? Sandy says sterling Oz for Sandy. Gotcha. Oh, I'm sorry. That 100 comes in just ahead. Didn't snap that right. But you get the picture. Still think you have a little bit more downside to go, but this is kind of the realm of which we need to see the breakdown to get the continuation of the broader trend. Really nice. Okay, so dollar index could see a little bit more of a drop, but watch that pop, as we were saying earlier in the week, looking for early weakness to give out to one last high here. Dollar CAD. Let's jump into the meaty stuff here. So this thing, you did see, so number one, a lesson of why we don't want to get aggressive on trying to call lows, and why I was just kind of highlighting these levels as levels of which we were looking for exhaustion. We blew through the last target and we turned right ahead of the next target. So I'm a little teed off at this one, but the general play was phenomenal. Here's what dollar CAD looks like first on the daily chart. And this is why yesterday's break was so critical, guys. You had the monthly opening range lows, which came in right at the 2017 open. That's the yearly open, which came in right with trendline support. Just basic trendline support, 3-tack touch, 4-tack touch, all coincided right there. So essentially the break below 34.35 was kind of the end game. 33.80 was a big level. You had the 100-day moving average converging on a 50% retracement. We blew through that. Here's where we were when I was kind of giving a warning. You want to a little be cautious here. Take some off the table. You had the 200-day moving average, the lower parallel, upslope support, right? This is basic support extending off the June low. If you take a parallel of that off the low that you made here in early October, pivot, a little messy, pivot, you all converged right there. And that's where we closed the session. So I was hoping to get a little bit of a bounce to get back in. I didn't get a chance. So unfortunately, the rest of the drop here, there was not much play on my end, but there's the other target, 32.83, 32.96. And the final target that I noted, or the sort of next target, let's call it, was 32.23. And we turned just ahead of that. Outside candle reversal here, engulfing candle, whatever you want to call it, taking us right back into this region. Look for initial support here right now, okay? Followed by, again, 32.25. 33.25, kind of where we lagged and closed the session yesterday. That's this region. Okay, so that's the first area of resistance I would look for on a whip back. I would still stay bearish below that, 32.25, as long as we hold that. Still looking for 32.23, and then again, the major target down here would be 31.41. That would complete 100% extension off the high. So quite a play. The other thing I want to note is that we talk about this a lot in the room as well. The fact that when we get these breaks of downslope support, typically can be the sharpest part of the move. And certainly if this is a break of this descending slope formation, we should see the acceleration as we get later into the U.S. trade session. If not, again, like I said, things are likely to go range bound. You have a major event risk. This is a dollar cross. So if you're looking to play CAD crosses, that's why I included Euro CAD and Sterling CAD last night. I do think there are better plays necessarily than having to play the dollar event risk, which is on tap in less than 24 hours here. Or I guess a little more than 24 hours. But you get the picture. So no change on any of the levels from last night. At the end of the day, I think you can get a little bit of a recovery here as you open up the U.S. trade session. Obviously, you're seeing that the dollar index is kind of turning over, but keep in mind, again, the euro is on that mostly, as well as the pound, which is seeing a nice little rebound. But for dollar CAD, bearish, near term sub 33.25. Downside targets remain unchanged. Any questions? Bear with me one sec. This is just kind of staring at me right now. I want to see what this looks like. Okay. It's not the cleanest, but I could live with it for now. If you take a pitchfork off the highs here, I guess this is the May high, the subsequent low in that same month, and the subsequent high that you made on the 8th, not the high that we made for June, but the 8th. You could see that the median line comes right in line with that same level that we were looking at. So we're going to continue to maintain, our bearish invalidation level at 33.25. It's right there. And in fact, the 50 line just caught the lows. So might not be too bad of a structure to highlight. The end result to the lower parallel also highlights a level that we're looking at 131.41. So, I'll leave that on there for now if you want to take a quick snapshot, guys. But at the end of the day, we're still have to look lower, sub 33.25. Questions on dollar CAD? Okay, Euro CAD, another one that we were highlighting. Here's what Euro CAD looks like on the daily first. And here's what Euro CAD looks like now. So for Euro CAD, there's a very similar picture. If you go to the previous update, guys, like I always say, the daily chart's never more than a day away. So just click on that link for the previous one, and you'll be able to see the daily chart. This is what we were looking at early in the week. 52.20, I put out a couple of pieces on this only with daily charts because the only region of resistance that really mattered was 52.20 in my mind. You had so much there. You had the upper slope, you had the 618 retracement. This chart came out on SB like 5 times with just the daily, but it finally held. You finally saw the break yesterday take us back below near-term support at 50.21, which was the 2016 open and a decent pivot in price. And we've already taken out that 49.10 target, which was sort of the last barrier of support. So on this meltdown here, you're approaching the lows that you made for May forthcoming here. I'll show you the scalp chart, I guess, at this point. Here's what the intraday chart looks like. The descent seems to be continuing to follow this really, really nice ML formation that we've been following for a couple of weeks now, or I guess since last week. Here's what it looks like. On the 8th, and here's what it looked like last night. You saw that break, first, second. We hesitated there, not even a bounce of any sort. So I was kind of stalking this before I went to bed. I just couldn't get myself to get in. And here we are approaching the lower parallel, which is just off our next target at 48.23. Don't get too caught up, guys, trying to get the stretch target. Always keep your targets on the inside. If you have a quarter of the ATR on a trade like this, which has a little bit larger of an ATR, as you approach those parallels, start to snip some off. But an area of which I'd be starting to look for some support, again, the lower parallel, and this former lows from May 10th. Now, as we always say, downside break of a descending pattern. If we do get it, you're basically looking for a drop into this region. This is basically 47.32. I would bring your attention to this 50 line, although we haven't gotten too much play off it. It was the swing low here. So that comes just ahead. Let's call that 47.70, 47.80. Okay, and then that 47.30 level is just a decent pivot in price. Former swing lows. Near-term resistance, 49.20 into 49.10. And for the immediate decline, I would put this as near-term bearish invalidation. If we get through this, Euro could see a little bit more of a spout to the upside. We'll get rid of that target for now. So that's what I'm looking at with Euro CAD. weary of trying to short this from now. If you're holding shorts, I wouldn't be bailing just yet. Keep in mind, momentum is in its deepest oversold territory that we've seen in a couple of months. And you don't want to necessarily fight that. You know, as long as you're in that oversold territory, the market is in your favor. It's a misconception that people have that because it's an oversold territory, they got to get out. You see how this stayed in oversold for a couple of days? Market continued to move lower. That's when the market has the most steam. So I wouldn't necessarily be bailing out if you're holding shorts just yet. You know, if you see this start to turn, or specifically the break above 30, that's your, you know, conviction jump out of the position. But as it stands, you know, you are coming into a level of support where you want to take a little off the table. Here's what it looks like on the near-term chart. Let me just bring up a 30, just for argument's sake. You're getting some divergence. Hold at 60. Hold at 60's resistance and momentum. It's pretty bearish to me. Okay, so on the hourly, you just had an outside reversal at the lows into support. Also could be a sign of near-term exhaustion. So watch 48.23 for any of you holding positions here on EuroCAD. Again, take some off the table, bring your stops down. If you get that break, look for that 47.70 level first, that daily support, and that 47.30 level will be next. Questions on EuroCAD? That is number 3. 1, 2, 3. All right, Sterling CAD was the best. Please tell me someone caught this with me yesterday. This was the best play because this is the only one that actually caught the lows that we were looking for. It's the only one that actually you know, respected that level very, very well. Here's what the daily chart looked like. Whoops. Really clean, very simple, and obviously simplicity is sort of the way to go here. But a quick look, we did a deep update on this yesterday. Here's the daily chart, and we just wanted to highlight this key range of support. Basically holds 67.93 into 68.53. You had the 50% retracement. You had the 100% extension. Just above that zone, you have the 100-day moving average, and just below that zone, you have the 200-day moving average. Now, you guys know me, I'm not a big moving average guy, but I always state, and I always kind of remind you that when those moving averages converge on key support, key resistance, that's when they become more significant. They're never going to give you that touch and go with precision, at least in my experience, as you get with, you know, median lines and Fibonacci levels and things of that nature. But in any event, big zone of support. So although we did make a break of an objective trendline support, initial monthly opening range on the 9th, although that shifts the buy slower, support is support, right? And while I was thinking that dollar CAD could get a bounce higher, that's CAD weakness, sterling was at support too, and sterling held support like a charm. We'll talk about that in just a moment. But the combination of my biases on the two on the immediate front, you know, I was kind of looking for a little bit of a bounce here. So that's still the support barrier to break. It's still bearish while below this trend line. But you need to be mindful of this near-term support here, basically into the 68 handle. Once you clear 68 to the downside, and specifically that 200-day moving average, you know, 65.45 into 65.23 would be the next big level. That's last year's low day close, which acted as resistance all throughout the start of this year. And I'll count that as the objective yearly opening range high. We didn't break till late March. And we're coming back to check that as support. Does that make sense? So the intraday chart looks like this. Again, the best of the set for the CAD setups last night. Here's what it looked like. 50% retracement. You came right into that lower parallel. It held for like, what, not even a couple of hours. And then we went right back through. Still could get another stab down. So that's why I think if we get another stab down, maybe get another entry or try to get as close as you can with a stop against that low to play another rebound. But I'm counting more on sort of the sterling starting to rear its head more so than CAD weakness per se just yet. But pretty clean as far as what we were expecting on the support front. There it is, that 67.95 region. Lower parallel, dribbled just below the lower parallel, but the 50% held like a charm. And here's the rebound. Let's see on a pullback, if we get another reaction off that median line, I'd be interested in playing some sort of recovery near term just to the 50 line or even to median line here. And then we'd look to sell it or look for a break. To be honest with you, I'm not really that bearish the pound. You guys know where we stand on the pound, right? So I'm more inclined to play these pound pullbacks on the rebound, especially against some of the calm currencies that we've been looking at. Any questions on pound CAD? At this point, you can kind of just drop that 100. And keep your focus on that 67.95 as near-term support. All right, feel free to take a snapshot, guys, if you need. That's number 4. Kiwi dollar, number 5. So Kiwi heading up near-term resistance. 72.30 is still the level that we've been looking at for the last couple of days. We haven't gotten it just yet. Here's what it looked like last night. And here's what it looks like now. The 618 barrier at 72.30 still converges on the upper parallel of the current operative slope, the embedded one, and just higher is the longer term slope that you're looking at here, which converges on it. So still the possibility for this thing to pop a little higher before it turns. You're getting, I don't want to call it strong divergence, but it is divergence nonetheless. The last 3 highs that we made, just put it objective so you can kind of visualize it better. Use a line chart, peak, peak, peak. Ever since then, there was a lower peak, and even an equal peak in momentum is divergence. Remember, what you're looking for when you're looking for divergence is that the oscillator is not showing an extreme in price, not vice versa. Price needs to make the extreme, and that needs to not show up in the oscillator. So even if it makes equal highs, no new extreme, I still consider that divergence. So not looking, obviously, to take any long positions on Kiwi just yet, or at all at this point. Still looking for some near-term exhaustion while below 72.30, 72.35. Again, the weekly open initial support here, unchanged on any of the targets. 72.04, a break below 71.70 is what's needed to get this going. So as we said last night, actually, near-term support 71.70. Actually, the low is 71.71. And then we came out, broke through the high, still looking for 72.30 on this stretch. I don't want to pick hairs on it, but with the Fed coming up, be super selective, okay? Be super selective. Remember where we are, by the way, on Kiwi. If we break the upside here, there's room. There is room. Still looking for a near-term exhaustion trade, though. Questions on Kiwi, going once, going twice. Dollar yen will be number 6. Here's what Yenski looks like. The abomination doing abominatory things. It didn't quite get the clip. 109.57, 109.47. That key support range that we noted came right back full circle. We're turning just ahead of the weekly open. Remember, bearish invalidation, we dropped to 110.41, 110.50. As long as we stay below this is the weekly opening range highs as well. I'm still looking for that move lower. Heading into FOMC, probably going to see this thing drift sideways and give you that pre-print lull that we head into. So I'm not really expecting much ahead of tomorrow, but the levels remain unchanged. Bearish invalidation 110.41, 110.45 here. Near-term support still 109.47, 109.57. Questions? I don't really have much to say here on dollar yen. You do have some event risk with Kuroda and all this coming up, but I think still a major play here is going to be what we're going to do with the dollar heading into tomorrow. Okay. Without further ado, Aussie. Aussie, Aussie, Aussie. Here's what Aussie dollar looks like. And here is what Aussie looked like earlier in the week. Here we go. So I'll bring your attention again. We were looking at this 75.60 level, the 100% extension, which converged just below. You had the 100-day moving average, and we warned about possible weakness off that level. Near-term support at 75.17, which is the former swing highs here, and converged right on the median line. So the risk was, topside bias remains at risk below that level. I still think that you could get a little bit of a pullback here. You're seeing some long wicks into that region, not something you necessarily want to see. But the intraday chart was rather clear, okay, heading into the start of the week. You had key resistance at 75.60. You had key support at 75.20 to 75.17, that same exact region. Well, guess what? It's now the weekly opening range, essentially, with the weekly opening range lows really following the gradient of this pitchfork with precision. Again, the risk remains for a pullback into that 50 line. Why are we looking for the 50 line? Well, the rally found resistance at the 50 line. So let's see if the breakdown or the pullback can find support at the 50 line. At the end of the day, the broader trade remains constructive, but your immediate risk is still for a drawdown lower. Again, keeping in mind tomorrow is FOMC. Intraday chart and live chart. So there's the second rejection of the 75.60 barrier. The 100% extension, 2 equal legs up, former swing highs. We check in the weekly open support right now, but the support barrier is 75.20, 75.17, downside break, and we're looking for that drop near 74.91. If you get an opportunity in U.S. trade today, you're still within the weekly opening range, so I don't want to get too excited, but ultimately I think you do get a little bit bigger of a setback here and the opportunity to get long from lower levels in the Aussie. People are going to be screaming to all hell double top, but not just yet, okay? Keep in mind, the double top formation play, the whole objective is to give you the measured move. So until you break, it's just testing resistance. I know there are people there itching right now for a double top, right? And guess what? Just to satisfy your curiosity, a more conservative approach, let's call it, measured move for that rally. Again, a conservative one, just measuring this range, puts the measured objective target of such a move down here at 74.85. Where our ultimate target on a break of the weekly opening range low would be 74.90. So objectively, sure, could be a double top. Either way, that wouldn't come to foresight until we get break below 75.25 or 75.20 rather, and the objective target would be at a level that we're looking at anyway. Does that make sense? But looks pretty clean. Aussie dollar going once, going twice. I would like to shift focus just 2 seconds to Euro Aus, which is an interesting cross if you'd like to play both of these. And here's what I was looking at with Euro Aus. The only thing that kind of shocked me this morning was this catch. That thing was ridiculous. It's a long-term slope. Here's what it looks like on the daily chart. Look at this long-term slope. This is extending exactly off the high from March of this year. You saw that we ran through it a little bit here, ran through a little bit here. Could be coincidence, but it's pretty clean. Take a look here on the 120 and we bring it out to a 240. These parallels have been catching some really nice levels. Here it is, even on a closed basis, pretty nice. Even though it looked messy on the daily chart, you could see break charged accelerations, near-term resistance, break saw acceleration, and here we are with support. So it could get a little bounce in Euro Oz. That would kind of coincide with Aussie weakness and playing a little bit of a Euro rebound. We talked about Euro 2, possibly going back into the monthly open, near-term resistance here, 12.43 before turning lower. So kind of plays out well. I think Euro Oz would be another setup that we might want to keep an eye on near term, especially if we clear back above 149.13, which is the objective weekly opening range high. That would give you that target back up. Let me actually just add a retracement here real quick. There we go. 49.64 be a sort of decent target if we do break the weekly opening range highs. Okay, we do have to be mindful of this region still. So I take that back. Look at this. The only thing I'm looking at here is the one thing that we need to respect is still this formation. We've talked about a couple of times how when we do see these breaks of the MLs, we want to still keep them in mind on the way back in because they can govern price action. And certainly the amount of reversals and plays that we've gotten off this ML, I still want to keep that as near-term resistance. So it kind of clutters up the chart a little bit, but 49.30, I'd still be looking. I'd lower this a little bit into here, sort of near-term resistance, just above the weekly opening range. Because again, just look at that resistance. That's too perfect. Acceleration, support. That's too perfect. Resistance, break, saw acceleration, downside break, accelerated. I'm still going to want to be very wary of that region. But price action looks pretty convincing today. If we do get an outside reversal off of support through the weekly opening range highs, specifically through that region, in my humble opinion, that might shift the near-term focus back to the upside. Downside break, 47.19. Questions on Euro Oz? Going once? Hey, Vlad, good to see you. Euro yen and Euro pound. If I have time, I will try to get through it. Let me pick up the pace here a little bit. So sterling dollar, also one that we've been following very closely. Loving it. I'm loving it. It's probably, sorry, I keep clicking on the wrong one. Probably the best dollar play so far this week. Here's what the British pound looked like earlier in the week on the 11th. We were saying that we were more or less looking for a hold into this region. At 26.16, 26.43. And that region was basically defined by the 38.2 retracement of the entire advance of the yearly range. It's also the former swing highs they made back here in March. And the median line, parallel. This is just a parallel extending off that swing high, random swing high from March, but ended up being the exact low for April. And that converged on the 100-day moving average here in blue, just lower. So this key range was so critical, okay, so critical. And we came into the week saying, look, I mean, at the end of the day, it's completed 100% extension. As long as we hold into that low at 26.13, basically we're looking for a rebound off that region. So that's exactly what happened. We came back, we tagged it. We're seeing a nice little launch here. We haven't cleared the weekly opening range, so you haven't gotten like sort of the reversal confirmation yet. But it certainly is looking pretty convincing. Here's what it looks like on the intraday. Okay, divergence, which is exactly what I wanted to see. Price action making a much steeper low, the oscillator making a higher low, one above 30, one sub 30. So I do like this thing coming off higher from here. I think you could get another pullback into the 2016. That's not the 2017 high anymore. So let me just get rid of that. The February 2017 high. You might get another pullback into that region, but largely speaking, I'm starting to like the upside here. As far as jumping into new positions, guys, trying to get into this at this point is kind of hard. You're already considerable ways away off the low, 26.37. You're almost 100 pips off. And there's nowhere here I'd really look to put you in against a stop. So you have to wait for the pullback if you're looking for fresh exposure. For those of you who are already long, we're looking for, well, I took some off here at the weekly open already, but I would be looking for that stretch into the weekly opening range highs. Remember, 27.55 is still a level that we're looking at. That's just a region of soft resistance. I would still be looking to take a little bit more off there, but I'm going to leave something on and see if we can't get the breakout. You know, with a stop at 27.06 likely if we do get a move higher from here. But trying to get in, you'd want to pull back at least until 26.76 here. Former swing highs, that slope, maybe then you can sneak a stop against the low. But we have to really clear the weekly opening range before we start to get too aggressive on the long side. All right, again, let me just zoom this out for you to give you a better picture of where we are. Huge region, huge region. Again, this is still key support, 26.16 into 26.41. Questions on pound? All right, that's what's on my list for today. So let me jump into your questions here. I do have a good 20 minutes to kind of get through these. So Sarub was up first with gold and silver. Sarub, here's what I'm looking at with gold, and this is what I was telling you earlier. That's not really my favorite trade because it's kind of just sneaking below support right now, and I don't know what to do with it. Here's the daily chart, okay? So we talked about this yesterday, also in the webinar, the fact that, you know, this major break and reversal back below this trendline slope off of the 2011 record highs is concerning. This is like false break, throw over, whatever you want to call it. I don't like that it spent 3 days, 4 days to do it, but at the end of the day, it was just a test of the yearly high, which held, right? Now, the issue here is how do you trade it, right? Not necessarily the directional bias. How do you trade it? I can't get in short here at the monthly low. You know, I just can't get that trade around my head. So do I think it's going to ultimately drop into 1241? Possibly, yeah. That's a nice area. It's the 618, huge pivot this year so far. Every test has seen either acceleration or a real strong rebound. And those levels both can coincide on the 100 and 200-day moving averages for gold prices, as well as that swing low from back here in 2016, specifically in October. So big region. Are we going to get all the way down there? Like I said, my opinion is that you do ultimately correct into that region before you move higher. But again, how do you trade it from here? There's nothing really to do. You would be hoping for maybe a rally back into the monthly open to test that multi-year slope again and then move lower. But here's what the intraday chart looks like. This is what I was following since last week. I want to mark the near-term bearish invalidation levels, the 2017 high day close here, which coincides on this pitchfork formation, which we recently just added. Again, we don't have too many plays off it, but the 50 line caught resistance, caught support. We're sitting there right now. Some decent resistance along the slope here. You know, could see prices as low as that 1241 level. Here's just a median line extending off that low, converging there. But I feel like I'm drawing straws with this, Sarub. So I really don't have super conviction on it at this point. But those are the levels I'd be looking at. This is just a basic retracement off the low and a pitchfork off the high. Sarub, does that help at all? It's a real tough trade here. Again, you're heading into FOMC too, and not only that, it's a good thing you remind me tomorrow, or that I just remembered. Tomorrow we also get CPI numbers from the United States, right? So we're going to get the release of CPI numbers, inflation data, always a game changer or a player for gold trades, right? Gold has the two major functions over the years that we've seen historically: our hedges against inflation and safe haven. So you have both of those risks tomorrow with the CPI numbers coming out just ahead of the Fed, and then obviously the interest rate outlook will likely see prices start to get a little more volatile here. So Sarub, with the lack of a necessary setup at these levels and the event risk heading into tomorrow, if you're not holding anything, might be a good time just to kind of map out your game plan as you head into the release. But I do think you risk a little bit more of a washout lower here. So if it does rally, initial resistance back up at 1274, followed by our bearish invalidation. As far as silver is concerned, a little bit cleaner. The only thing I do like about silver is the structure of where it's finding support right now. So this is the median line that we added earlier, I guess it was this month. Oh yeah, it was this monthly high. So it is this month. Oh, this is the 240, I'm sorry. Here's the daily. Huge region of resistance. Remember this, I was just kind of perplexed because I didn't know if this was going to be a break or not. This was a 618 retracement. They had the upper parallel, which the lower, this parallel, which was the 618 line actually, ended up being perfect support. We branched through, thought that was a breakout, ended up being a throwover just like it was in gold. Didn't last anywhere near as long as the gold one did, but we quickly recovered back below the 100 and 200-day moving averages, shifted the focus to the downside. The decline on the near term seems to be at median line support. Again, if you look at a 120, you've actually gotten some pretty nice plays off this formation. Support, break, saw acceleration, resistance, resistance, break, saw acceleration, break, saw acceleration, and here we are. 618 is just lower at 1669, and then you have the lower parallel here. So, curb your appetite for the short side here, in my humble opinion, on the immediate front on silver prices heading into 1669. Still an oversold, so like I said, if you're in a short position, you do not want to be necessarily jumping out yet. But this is a level I'd be looking at as near-term support or area of interest for exhaustion at 1669. A little bit lower from where we are now. Hey, D, good morning to you as well. No worries. Thinking going long at 1240. Sarub, did I miss that? Oh, that was for gold? I would be interested there too. Yeah, 100%. Well, I should never say 100% in trading, but yeah, I agree with you. 1240 is going to be a big zone. I'd be surprised if it kind of just sailed through that and didn't give us at least a decent rebound. But at the end of the day, you're heading into the monthly opening range low. So yeah, let's see if we can't get that break. But Sarub, I think I'm with you on that one. Okay, so that's gold and silver, number 10 and 11. Going in the order that we came, Bangani wanted to look at Aussie CAD. Aussie CAD. Let's see here. It's been a while since I've checked this out, so bear with me one sec. I'm going to go right on the fly for you. Okay, so this is actually support right here on a couple of different accounts. Obviously, it's the monthly opening range low. It's also going to be the swing low that we made back here. That's when we first mapped out this region, which actually has been a decent pivot. But it also coincides on the 618 extension from the decline off of the actual high that we made for the year. So that gives you 99.65, 99.57, nice little padded area of support with the opening range low for the month coming just lower. So it's full round trip, failure to hold above the 100, 200-day moving averages. This actually does cast a bearish shadow, in my humble opinion on this. Now, that said, you're at support. You're at support. Yeah, D, we went through those already. I'll have this archived as soon as I can, as we run to the end of the session here. But I'd be looking at that Bangani as sort of a red flag for right now if you're looking for short exposure. I do like the idea of the short here in general on a broad CAD strength. Aussie we were looking at coming off resistance, right? So could be a decent play. Let's delve into the intraday chart and see if there's any clarity there. Just copy some of these levels so we don't have to do that all over again. And that retracement's there. Okay. So on the near term, take a parallel here. See if we can't get any play. Resistance, resistance, break, support, bounce, break, acceleration. I'd be looking for resistance right around here again. Now, ideally, I'm working this drill here with you guys live, but ideally, what we want to see is near-term reversal in price. So maybe some divergence with a trigger break or something to solidify some sort of low is in place. Once we have that evidence, tack on a quick retracement, and I'm going to want to see a retracement hit one of my levels that I've mapped out, especially on slope. So this would suggest that as long as you stay below 10065 here, the broader trend remains lower. At the same time, if you got a near-term trigger to the upside, that's where I'd be looking for resistance or a target or to close my topside limit. Remember, the trend is your friend. So you're either looking for this rebound to get short, guys who are a little bit more aggressive, who are trading this intraday. We're looking for sort of possible exhaustion, long triggers, and then again, as you play the long side here, you have to stay nimble because you're playing against the trend. So if you were to take that little rebound there, you'd want to be taking some off as you clip off a quarter of the ATR, bring your stops up, look for that stretch. But that's my bearish invalidation level near term. And I bet you it's the 25 line. I don't even need to draw it on. Or, excuse me, the 75 line. It's a little bit lower. Okay. That's Aussie CAD. Does that help? That was for Bangani. Does that help? Does that make sense? So you're at immediate support. A downside break from here, like I said, the 618 is kind of the big region, 99.12, 99.13. Same type of deal. Same type of deal. That's the actual 50 line of the descent. Near-term resistance up into that 10050, 10060 region. Thanks. I'm already 36 pips on the short up. Awesome. Awesome. Nice play. Nice play. In fact, let me also just draw your attention to one other level here. Bangani's right here, the monthly open. I would probably be looking at that's 30 pips lower at 10031. So initial resistance. Obviously, it's going to be dependent on where we are in time. This is kind of still bearish invalidation, but I'd be looking for the monthly open as also a target as a near-term resistance level there. But yeah, watch this support break. If you're still holding it, 9912 would be the next level, and that's where I think things could be a little bit more critical. That's down here. Hey, look, the 200-day moving average, by the way, is also on the monthly open. Get out of here. Yeah, so you definitely want to be watching this. Definitely want to be watching this. All right, so that is Aussie CAD. Sandy, you're looking for pound Oz as usual, right? Let's take a look at pound Oz. Also with a very interesting play. Pound Oz, where are you? There you are. Off of a major support structure. So again, all the pound crosses coming into really nice support. We talked about the Aussie dollar possibly coming off resistance, right? That double top that could be in play. I'm very timid to call it double top because again, you're awfully heavily reliant on Aussie strength to really get that going. So maybe it is, maybe it isn't. At the end of the day, you know the level to beat in Aussie dollar. But if you look at pound Oz, it certainly looks primed, doesn't it? Big level that we came off of last night, the lower median line parallel of a formation that we've been following off the yearly lows. You kind of probed through a key support barrier. We're looking at 67.58 into 67.76, but just lower. You had, I don't know who moved my lines here. Just lower, you had the 618 extension, former swing lows from back here in 2016, specifically in August, really nice pivot in price, right? And the 50% retracement of the yearly range, all coincided right here. 200 and 100-day moving averages converging on the lower parallel. So whatever way you stack it, this is absolutely paramount here for this bought at support. Sandy says, I mean, you couldn't pick a better level. You could not have picked a better level. Momentum coming right into 20 or 30 rather, and turning off. The only thing I would say is you don't want to get too aggressive on it just yet. I do like the play. Here's what I'm looking at with the near-term chart. I haven't updated this, Sandy, since the start of the week, so let me just take a second here. Yeah, I don't really think I need to do anything. There was that key support zone. Came right into it, turned just ahead. This is a basic trendline resistance. Remember, we were talking about leaving this on the chart. It might offer some guidance. Break, saw acceleration, turned as support. Break, saw acceleration, turned as resistance. We're there right now. We're there right now. Unchanged on the week would be a move back into 168.72. Beautiful divergence, just as we saw in some of the other sterling crosses. Not as conviction because the second reference point was still below 30, but it's there. Sandy, I like it. I like it. Sandy says 67.70 is the MS2 where I bought it, but it's just an intraday trade. Okay, so you're basically long from right here, right about here. Not bad. Not bad. Yeah, I mean, an area of which, again, heading into the U.S. Open, you're up at 60 or maybe just below here on the momentum signature. Yeah, it could get a little bit of a kickback. If, the way you play these kickbacks, guys, if you're in the trade already, I get deep into the chart, right? Get into the 15-minute, 30-minute. Once you see near-term reversal or a break back below, you want to take a quick retracement, see where that lines up with any key levels that you're looking at. So just as a quick drill here, if this were to give us a downside break, say below 68.70, this would be the retracement I'd be looking at. And the 50 lines up pretty nice with a pivot in price here. And if this is going to rebound, again, this is too early to call, but if it is going to rebound, there's the median line I'd be looking for. And that's actually pretty darn clean. So I'm going to leave that on there for you right now. But Sandy, that's, pretty clean. Rejection of the median line, come back to the downside. The 50 line would coincide based on time. Wouldn't really line up with any of these fibs unless we're looking at like 2 days. Maybe, oh, I'm sorry, this is a 15-minute chart. So yeah, something like this into the close of U.S. trade might be a nice entry. And one other move I just want to measure real quick is if that topped out at 7. It's not a 786 either. Huh? Right on the money. Near-term resistance. Target. Broader bullish inval. Okay. Area of interest for entry for the long side, breakout, target, bearish invalidation. Or excuse me, bullish invalidation. As long as you stay above this, you're constructive near term, especially on the momentum signatures that we've been seeing. Even on the intraday, look how radical that is. Not bad. And of course, on the upside, here's the highest momentum signature read that you've gotten since back here. What happened there? Pretty strong rally. Once we broke into overbought territory, it stayed there from the 31st all the way till the 1st, so basically the entire session, before turning over. Again, this is getting real deep into the analysis, guys. So obviously, you know, when I'm presenting the charts here, I'm kind of giving you the levels, but just to walk you through, you know, if you're already in a trade or once you get up on a trade, like how do I navigate out of that position? That's sort of the process that I go through. So I hope that was a nice drill there. Questions? Sterling Cat 2, you were in, Sandy. Yeah, it was a little bit harder to catch if you weren't in that a little bit earlier. Sterling Oz we got for Sandy. I think that's all the questions. There was one that came through the end, Euro Pound. Who was that? Vlad wanted to look at Euro Yen and Euro Pound. So Euro Yen, we covered that last week. Here's what the setup looks like now. It's kind of messy. Let me clean up some of these parallels. But here's the setup that we looked at last week. I've lost confidence in this median line formation that we were following. You know, we saw that the 50 line actually did play a nice little pivot, support, support, break, resistance, resistance. The 50 line to the bottom end or the bisector here also caught support. But the median line now is getting messy. I don't, you know, I'm just not a big fan of Euro Yen here. If you put a gun to my head, broadly speaking, I'm still constructive Euro and still constructive Yen. So I'm not surprised to see this chop here. So Vlad, did you have a specific question or a game plan here on Euro Yen at these levels? The game play last week was the move into 2267. That's it. I don't, you know, really have a strong opinion from here. Here's the daily chart looks like. This is a big region. It's 2017 open. It's a longer term 50 line, or the longer term median line off the lows from here. So you're at support, you know, but do I want to necessarily be short yen? So I would watch, you know, I'd look for a break, you know, either sub 2255 would get me interested, or a break through the monthly open would get me interested, just on a basis of basic trendline resistance, the monthly open, and that would put me a little bit more on the constructive path, looking for 25.35. Until that happens, I'm being completely frank with you, Vlad. That's the only time I'd get interested in this trade at this point, either on a rally into this or on a break below this, in which case you would be looking for a run into the 50 line of the opposite side. Does that make sense? The plan, how likely the decent pullback below 122? Yeah, I mean, if you get the break of 2258, I don't even need to see 22 to be honest with you. If you get the break of that swing low from last month, which would also be an objective break of the monthly opening range low, Vlad, I'm with you on a move sub 22 for sure. I mean, if 2256 gives out, I'd be looking for 2160. I'd be looking for the 100-day moving average. Like I said, even the lower parallel. But until it does, I don't really have necessarily a play on this one. The other one you wanted to look at, he says, yep, I got the point. Okay, so the other one you wanted to look at was Euro Pound. Another one which I haven't looked at this month. Checking the yearly opening range highs here. Also the 2013 high, apparently. Also the 618 of the decline. and divergence. Okay, let's take a look at this. I do have to run, but let me just satisfy my curiosity. I think that's probably the cleanest way to look at it. Don't really like it, but yeah, that could be a throw over for sure. For sure. Watch today's close. In fact, this would be the easiest play to play this one. The easiest way to play this one. First of all, not my favorite pair to scalp, guys. Not only because of the contracted ATR, but because of the cost. You're holding euros and the pound. So again, the gains and losses are in pounds, and not only that, it's going to be a little bit more expensive to hold, as well as contracted ATR. So it's tough to get excited about intraday trading this. That being said, we have seen a lot of volatility over the last couple of days, or I guess weeks. And this pop through and reversal would have me looking for a near-term correction. I'd need to see a break of the weekly opening range low. No. A little bit cleaner, one touch, two touch. Little seesaw, resistance, break, instant support. Comes in at 87.50. I'd highlight that as it converges on the 50 line here. So on a break of the weekly opening range low, that's kind of your first target. And this is why it's a little bit tight on this trade. So that's only like, yeah, it's decent 30 pips to the downside. On the break, obviously, if we make it back above 82.20, we close above it, I still would be looking for continuation. It's in an uptrend till it's not. You've gotten divergence into the highs, so you are marking some sort of waning momentum. Now you need to see this the reversal confirmation. So either break of the weekly opening range low, a decent trigger in momentum, which actually looks like it has given out already. If we take the price action from the low, it's only a 2-point touch. But that would have put you short earlier. And I'd just like to see a little structure to the decline, but certainly on this bout, break below near-term support, former resistance, checking it as resistance now. 87.50 is what you should be looking for on the way down. Vlad, does that help? It's a quick look at euro pound. All right, ooh, I'm over on time. All right, guys, I'm going to wrap it up here. Thanks to everyone who attended. So tomorrow we'll go into depth about all the dollar crosses. Again, we'll give you a nice little preview of the FOMC. If you're trading today on the intraday, it's a good day to keep it light, especially heading into Asia. Tonight's update will largely be the dollar crosses again, just to give you sort of a clear picture. But keep it light, okay? Reduce your leverage size and don't expect too much in the way of volatility as we get thin market conditions ahead of this release. It's not going to be a simple shoot of the bat, right? We're expecting the interest rate hike, and the devil's in the details as far as we get with Yellen, the presser, and all the questions that she's pushed on. We get a little bit more clarity on that. Karthik, yeah, we could look at dollar peso tomorrow. Just remind me earlier in the session. I do have that coming into a major key support barrier, 18.0045. The upper end of that support barrier is 15.860. Huge, really, really big support, okay, and slope support. So If we break below this sayonara, I do think you could see some really accelerated losses for dollar peso. So again, I don't necessarily expect that break before tomorrow, but heading into the FOMC, certainly anything's possible. All right, guys, I'll see you tomorrow. Have a great session. Cheers.